Looks like it's not yet started. Cool. Okay. So, welcome to the Financial Inclusion Week. My name is Sofen Kama. I'm the principal investor for Mexico Ventures, the venture arm of Mexico, the US organization. We are an impact investor with over 50 portfolio companies in Africa and mainly in Latin America, investing typically in ag-tech and food systems, in climate-smart infrastructure, and inclusive fintech. Today, we are going to talk about safeguards and transparency in inclusive financial systems. For reference, I'm here from Dakar, and I just will start with a very simple story about my experience with safeguard and transparency in payments. M-Pesa, probably more generally mobile money, is the poster child of financial inclusion in this region. But there is an important point that often we tend to miss, which is how safeguards played a critical role in the early days, in the early 2008-9, when the whole phenomenon was just getting started in Kenya and then all over the rest of the region. For reference, this is a concrete example that I'm taking from my own experience. In 2015, I joined Millicom, the financial service and telco operator. And I got moved to Chad as head of mobile money. Soon after reaching the country, the Boko Haram group basically attacked Jamena, the capital. And they started cutting out the routes, the cattle trade route between Chad and Nigeria. So for information, Chad actually provides about 30% of the meat consumed in Nigeria. So this is quite a huge sector. The sector was in crisis. I was new to the country. Mobile money was just getting started about a year and something ago. And the traders community just rushed to our offices and turned to us for a solution. When we started looking at the case, I noticed that the entire trade between Chad and Nigeria was actually unlocked in a particular city called Maiduguri. When you send money for trade, especially for cattle trade, the Chadian money would be exchanged to Naira and back in this particular city. And it happens to be the city where Boko Haram essentially put their stronghold. That's where basically they were basically threatening the traders, collecting part of the payments. It was just very, very difficult. But that was no coincidence. We immediately started deploying mobile money kiosks and agents into the cattle trade markets, initially in Chad, and then linking them with banks on both sides. And over time, we literally digitized the overall flow from one country to another, removing any need for transacting in cash and transporting cash inside the country and along the border, which was really quite a safeguard for both traders and cattle owners. Another thing we discovered after that experience was that we could, for the first time, discover how the trade worked, like how many intermediaries from the cattle owner to the trader, how it gets to Nigeria, who buys it. And this was also extremely helpful for supporting banks and for the chambers of commerce. I could spend the whole day talking about this story. This was in 2015. But coming back to the case, this was just a primer to say, to explain all that payment systems have in the economy. They are basically the fuel that keeps every other sector running, whether you are in agriculture, whether you are in energy, whether you are in commerce. That's basically what facilitates the transaction, the exchange of value from one step to another into the value chain. And every time you have a friction on that payment rails, it basically gets the entire system crippled. And also, this is something I like to say in payments, when there is a crisis in a particular market, in a particular industry, for example, the case of cattle trade between Chad and Nigeria, sometimes the best way to discover the root cause is to go back to the payment, to the underlying payment. Like once we get to the payment, we realize how Boko Haram was operating and why they targeted that particular route, and that's what gave them strength to attack both countries. So in this session, we are going to dig a little bit deeper into some of these challenges around payment bias, about lack of safeguards, lack of transparency, lack of trust, and we will also explore how more transparency could also help create more opportunities for SMEs and producers. I'm joined in this session by Jinal Suti, the founder of Epoch, Isabel Garcia, the head of ESG for Vercor, and John Muenda, the founder of Agre. So I'll start with letting them introduce themselves before starting the debate and discussion. Welcome. Jinal, maybe do you want to get started?
Sure. Thank you for having us, Tafin. It's a pleasure to be here. My name is Janal, and I'm one of the founders of Epoch. I've spent the past actually more than a decade in payments, and specifically in payments into emerging markets. So the types of payments that I ended up kind of working on were high volume, low value transactions that incorporated either remittance flows or supply chain transactions, typically ending up in what we in supply chains call first mile and what we call in payments the last mile of payments. And so I got exposed to a lot of these supply chains in the global south, so in Latin America and Africa and Southeast Asia and so on. One of the things that I realized as I was working on this is that these supply chains tend to be very, very opaque, and there's very little data that flows with the product. So that model, the way these supply chains work, has just not changed. In fact, it's gotten even more and more opaque with the emergence of commodity traders and how things get aggregated and mixed and so on. But that's changing rapidly, and it's changing because of regulation. So now governments are saying to corporates, you are now responsible for what happens in your supply chains, and you need to know exactly what's behind the goods that you purchase. So you can't hide behind a trader. You can't hide behind, some sort of a mixing agent. And what we are realizing collectively is that the data layer is missing, which basically allows somebody to look into that supply chain and actually see where the thing comes from and where it was growing, what were the conditions, and what were the externalities, positive and negative externalities in what it was growing. So at the core of it, this is what Epoch does. We provide the data layer for agriculture and forestry supply chains. And this data layer basically provides visibility and transparency into a whole host of what we call process metrics. So these are mostly environmental metrics that relate to carbon, biodiversity, water, and other things. One of the things that this data layer enables actually is climate action, positive climate action. And this is this notion of an insetting payment whereby the buy side of these commodities actually offer incentives or payments or some sort of a financial transaction in exchange for improvements or change in practices that lead to improvement in the in these supply chains. And so that's one of the kind of use cases of having that transparency in that data layer to actually drive a lot of the climate positive payments and actually turn that the data into a monetizable product for producers in the global south. So that's what we do at Epoch, and I'm happy to talk more about transparency in the data and how it relates to payments and where we go from here.
Excellent. Thank you. Yeah, we'll get back to that a little bit later. Maybe Isabel, if you can also introduce yourself and tell us a little bit more about Vercor.
Of course. Thank you so much, Dafini. I'm so glad to be here. I'm Isabel Rodriguez, and I'm the head of ESG and Impact at Vercor. Prior to Vercor, before I tell you about Vercor, I was working with farmers across the Midwest and helping them connect directly to the buyers. Why? Because these farmers were implementing regenerative practices which carry benefits in their crops, in their traceability, in the health of the soil, climate action. So these farmers wanted buyers who were interested in these characteristics to pay them what was right. And there are buyers who are interested in this type of crops. So we were making a more streamlined agricultural supply chain. With that, I finished my studies in the US and I came back to Mexico. And I wanted to replicate the model I was doing in the US in Mexico. I was sure there were going to be some differences, but I was hopeful it was going to be something achievable. As I came back, I started to do my research. I talked to growers, farmers, I talked to buyers, I talked to all the stakeholders of the supply chain, and found out that due to several factors, government change in the administration, etc., and the market itself, farmers, 93% of farmers in Mexico didn't have access to formal financing, which was crazy for me to find out. So I wanted to know who was doing what in terms of financing 93% of Mexican farmers. And I came and I found out Percor. Percor is a fintech for the ag sector, and it focuses on small and medium farmers in Mexico, who are the farmers that don't get access to this formal financing. So what we do different and why we're able to finance farmers when other players can't is because we don't focus solely on data that's available, because the data available says farmers have no credit history, farmers are risky, rural areas in general are risky, so that's that. We focus more on productivity and on transaction history, even if it's informal, of the farmer. And we're able to create more data and to introduce them to the formal financing system, which not only opens the door for them to get credit for their production, but also opens the door for them for many other opportunities. We also really focus on digitization of the farmers, on financial inclusion, on financial literacy. So we are bringing these farmers into the formal system for more than just their Vercor credit. To this date, we finance more than 2,000 farmers all across Mexico. Mexico, as you know, has a lot of biodiversity. There are a lot of crops. And the beauty of our product is that it follows the crop's time cycle. So we don't ask the farmer to pay mid-cycle when they don't have money, because we know farming is it's about timing. No, exactly. Between planting and harvest, farmers struggle with cash flow. So we follow the crop cycle, and we ask farmers to do a single payment if it works for them, several payments if it's better for them. There's no penalty, but when they have cash available, not in the middle, because what would happen before, farmers would get like an informal credit with friends, family, or someone they could get a credit from, and it would hurt their business. And what happened is they weren't able to plan ahead. Like they would live a cycle at a time, and this leaves them without any resilience for future events at all. And now that we're facing more and more extreme climate events, this just wasn't working. So yeah, happy to jump into more of it. But for an intro, I think that's enough.
Perfect. Absolutely. Very insightful. But turning to you, Mwenda, if you also can quickly present yourself and tell us a little bit about Unbiased.
Yeah, sure thing, Tofin. Thank you so much for this opportunity. Good morning, good afternoon, good evening, everybody. My name is Mwenda, founder of Agrals, where we enable businesses to assess, respond to, and price climate opportunities. And we do this through generative climate models, which power different verticals, particularly in the finance, mobility, infrastructure, and carbon industries, enabling them save billions of dollars every year. Now, I've spent more than 13 years right now in the AI space and the data space with a huge focus in the global south. And one of the key things that we've seen over and over again is the data fragmentation across the continent and the global south, right? And we've been trying to solve this problem across different organizations over the last 10 plus years, right? And it's a key problem because when you look at the statistics, for example, by 2050, Africa is going to have 54% of the world's population, right? So this is a big and urgent problem, and I'm very excited to be here today to contribute to this topic and come up with potential solutions and next steps. Thank you, Tofin, and back to you.
Excellent. Yeah, we'll talk about AgRails and especially how you're using AI and also how to master the whole AI revolution when it comes to safeguarding customers and data privacy. So maybe, Jinal, I'll just come back to Epoch and start with some of the first question. I think you did touch a little bit on how basically transparency is helping foster more inclusive payment systems in your career before, and then especially now in the decarbonization sector. If you could just maybe give us a few examples of cases where maybe that lack of transparency has been a challenge. I know that, for example, in the carbon credit sector, there was a lot of issues in a year or two before with the way, for example, carbon avoidance was being measured. So I'd be just curious about how you see that industry and how you see things evolving in the future.
Yeah, I mean, I think the VCMs are a good case study in terms of what happens, or at least the V1 of VCMs. I think we've come a long way since the early days of voluntary carbon markets in terms of transparency and kind of more rigorous analyses of what's happening on the ground. But essentially, you can create a lot of transparency around what's happening on the ground, but it's unless you kind of, to your point, unless you track the money and show where the money is going, you don't actually know who's being incentivized to do what. And I think it creates a big problem because companies can't determine the cause and effect. So I'll give you one example from 2 weeks ago. During Climate Week, we, along with a partner at Epoch, hosted a roundtable with CSOs, and one of the CSOs of one of the world's largest retailers is setting aside millions of dollars of decarbonization sort of incentive payments for their supply chains. Now, obviously, as a retailer, you're sort of the last stop in that chain. You're at the end of that supply chain, and you're the furthest from the farmer. Yet most of your climate impact actually happens at the first mile. So, you know, how do you get that money from all the way from the retailer to the farmer, and have the data go all the way back from the farmer to the retailer to basically tell them what's working? And what the CSO told us is that it's sort of, for him, it was a black box. He would give millions of dollars to his partners who happen to be CPG companies, and he basically said, I don't get any data back. I don't understand what works and what doesn't work, which practices are taking off in which regions, which have the highest ROI in terms of climate impact, which ones just don't work. He was basically getting no transparency and no data back. And it creates a problem, not because, you know, they want to, or in this particular case, it's not that they wanted to, you know, account for these removals and reductions in their scope 3 footprint and kind of, you know, make a big splash about it in public, but rather it was for them to understand what is actually going to move the needle and where do we drive incentives for farmers to do to do the things that actually end up working. So having that layer of sort of transparency in terms of where that money goes and how much of it is left for the farmer to incentivize what action and what was the result of that action, over the course of 6 months, over the course of a year, 2 years, 3 years, 6 years, 10 years, that data is incredibly important for the system as a whole to understand what's working and what's not. And I think we're getting there. I think with digital finance, with blockchains, with the ability to actually create this like layer of transparency and the ability to actually trace materials and how they flow, we now have the capabilities to kind of provide that level of transparency. And so in a world where that transparency exists, now you can think of a large retailer in the global north, let's say, to manage and reduce their scope 3 footprint, be able to drive incentives in areas where they know they have seen positive results come out of it. So Albert Heinz or Walmart or Morrison's may be able to say, here is our incentive bucket, which we can co-contribute to in addition to our other supply chain partners, the CPG company, maybe it's a buyer, maybe it's a trading firm, maybe there are multiple sort of players along that supply chain because it's a shared responsibility. And here's where that fund is going to achieve these outcomes. And this is exactly how these farmers who are actually doing the work on the ground are being incentivized to achieve these results. And this is how they're getting paid to do that. And I think that level of transparency aligns, it creates a very clear sort of level of accountability and incentive model where everyone understands who the person is on the ground that's responsible for achieving the outcomes everyone wants them to achieve, but also for everyone else to understand, what works and what doesn't work. And I think, what had happened so far, even in the VCMs, was you saw projections of carbon reductions or avoidance metrics, but A, we didn't have the data to see whether that was actually happening, and B, we weren't actually seeing where the money was actually going to the right people who were actually being tasked to achieve those objectives, i.e. the communities and the people that had the stewardship over the lands that these projects were built on. I think the Kariwa project is actually one of the worst examples of that methodology. But to sum up, I think transparency goes both ways. For the farmer, transparency includes, here are the metrics we're going to be looking for that drive the incentives you will be paid. And so they know the cause and effect, of their actions. And the transparency all the way to the supply chain partners, all the way to the retailer level, it basically shows here's what's actually moving the needle for you. And this is what you should be investing in. By the way, not just for climate, but for multiple other reasons, for resilience, for higher nutritional density. There are other sort of externalities that come out of that. But having that layer of transparency in payments and in data achieve these outcomes on both sides of that supply chain.
Absolutely. I must say that one of the really things that I caught my attention on Epoch was that you are not just looking at the data, or you're not just looking at the monitoring of these nature outcomes. You are more focused on also how the inset gets to the farm. And that this is really something that is dear to me. I'm 100% convinced that until when your incentive reach the ground properly, no matter what your goal is in terms of decarbonization, in terms of nature outcomes, you probably won't get them, regardless of how you monitor. So until that incentives get really to the ground and people understand why, transparently, why they are getting paid and how much and for what, maybe the overall goal from the retailers will probably not happen. Regardless of the regulations and policies and budgets you are putting in. So yeah, that's really one thing that I really like it about your approach to this market, which we felt like was very unique and worth looking at.
Maybe go ahead. Sorry, I just wanted to quickly add to that. I think there's a lot we can do with that level of transparency. So one of our customers, it's a large tea estate that basically takes its supply from 13,000 odd farmers. And one of the things that we're doing actually is we're incentivizing the blocks. So not individual farmers, but your collective unit. So each block will have 400 to 500 farmers. You can think of it as a village. And what we're actually planning to do is we plan to, for these premium payouts, we plan to post, on the, on the polls, all around the estate, which block did what and how much they got paid. And so everyone gets to see, hey, the next village, look at what they achieved last growing season or last year, and look how much they're getting paid. We need to do better. So there's a level of transparency that you can also create around an ecosystem where there's a collective action that gets incentivized, not just individual action.
Absolutely. Fantastic. Now, let me turn to Isabel on Vercor. Again, our incentives are great, but sometimes also, as you rightly said, what is missing in our regions, whether it's in agriculture or in infrastructure, is often the credit gap. Unfortunately, credit often require some collaterals and data, which often doesn't exist. So, and then it also comes down to bias, because people are used to consider that farmers are this way, or this particular crop doesn't generate yield. And if you are doing something special, you just basically get blocked by that kind of barrier of bias. So I was just curious if you could, get a little bit deeper here and tell us maybe some cases in your experience and in Vercor where you some form of bias basically were really, really challenging and potentially undermine the effectiveness of any potential attempt to help finance the ag sector in your markets.
Of course. Great question. So as we all know, due to lack of data and many factors, there are cases where biases in financial systems can undermine the effectiveness of credit solutions. So, for example, the reason why 93% of farmers in Mexico don't have access to formal financing is because there's this risk perception bias where, due to lack of data, financial institutions perceive small farmers as higher risk. But there are additional biases, like women in agriculture, particularly in rural areas. They face more difficulties even accessing credit due to traditional biases, lack of collateral, or even lower financial literacy than their male counterparts. And I also don't want to leave without mentioning indigenous or minority farmers. In Mexico, they may experience discrimination or even face language barriers when navigating financial systems. So how Vercor aims to address these issues is by working directly both with the communities, but also all the stakeholders in the transaction and in the supply chain. First, to understand farmers' specific needs, specific operations, and be able to see the whole picture, even if it's not yet traceable in a formal formal manner. So what we do is we focus on partnering with every stakeholder in the supply chain. So, for example, last year we partnered with Nestle, who works with a lot of coffee growers across Mexico. But they don't directly work with these coffee growers. They work with the buyers of the coffee growers who buy from a lot of small coffee growers in the region. So it may be challenging for them to get the visibility to each of one of the coffee growers. So what we did is we created a specific product for small coffee growers. The needs they had were even $500, like really, really small credits, custom made for this type of coffee growers. But to ensure that they implemented practices Nestle was interested in implementing in their supply chain to decarbonize their supply chain. So we were able to, through our credit, we were able to show Nestle specifically what input these farmers were buying through Vercor's credit, In addition to that, we provided them with insurance to help their climate resilience because they had never had insurance in their lands before. And Nestle was able to see that, to get visibility into the last part of their supply chain, which is something that is really hard to do, specifically in coffee supply chains and cocoa supply chains. So now we're working with the whole Plan Nescafe program, which is this program Nestle has across Mexico in various states. And we're working in something similar, partnering with coffee buyers and coffee growers to make custom products that fit their needs and that also de-risk our credit and allow Nestle to get more visibility into their supply chain. I also want to mention, in terms of women representation and gender bias, these challenges are obviously extremely complex, and sometimes it's not something startups can solve on one end, right? We cannot solve every single challenge the ag sector has. But if we're already working and touching these persons, it's like there's something we can do. So, for example, with women, we created this program named Socias Vercor. It's like Vercor partners, but really female centered, where we work with women in rural areas. We give them this whole training to make them like trainers of trainers, and give them classes like in financial inclusion, sales tactics, digital tools, and empower them so they become these leaders in their communities. And that people, like, if people have any questions, should I get a credit, should I don't get a credit, because sometimes there's this like inner discussion between getting a credit or no, they would know to ask the specific woman in their areas because she's an expert. And with every person this Vercor partner sends our way, she gets a commission, which is additional income for her and really impacts her livelihood, because otherwise she may be working in their family farm, but it's work that's not remunerated due to customs in Mexico. So it's not necessarily yet a custom credit for women. It's something we're working on, but it's a little bit more complex. But we still can do things to address these big challenges the ag sector faces.
Yeah, thank you, Isabel. I think that access to credit is really, really, really critical, especially if we can go beyond like the normal barriers in general, whether it's gender barrier or reach in rural areas. An important point I just wanted to indicate about credit is people really sometimes do not get this, but credit is also such an amazing way to incentivize things. Like you want to get people to adopt a certain method, regenerative agriculture, or whatever. So often, the best way is to use credit as a weapon, as a carrot, to basically make sure that people come in. This is something that is highly, highly known in generally two-sided markets, when you want to have one side of the market come in first before the other. But it is a general thing, which means that if you want to have, whether it's government, whether it's retail brands, or any major organization to move, to transition into a particular new practice, often credit is the best way to do it. But you have to have that initial credit first so that people get on board it first, right? Which is what you're doing. Thanks, Isabel. I'm just going to turn to Mwenda, and I know that we talked a little bit about insurance, and I know that insurance is also something that is dear to you, especially in the work that you are doing in Uganda. So if you could just tell us a little bit more about AgRails and the role that transparency plays into the farmer insurance sector. And I know that this is quite a challenge in our region to get people accept even the notion of insurance.
Yes, thank you, Tofin. So the way we look at this challenge is from twofold, right? The first is what you mentioned, transparency, and the second is from a data fragmentation or rather the fragmentation point of view, right? And the way for us we think about the data fragmentation piece is from a point of for you to make a decision as an organization, in this case, an insurance company or a finance company, you need data points from different areas, which you bring together for you to then make an accurate decision about a particular thing, person, organization, or what have you, okay? And in the context of Africa and a lot of global South, there is quite a bit of challenge right here, right? Particularly in the data fragmentation space, right? So the first challenge is the fact that it makes it very difficult to assess risk, right? Because assessing risk is the first step towards determining how much you're going to charge someone for insurance or how much you're going to give them a loan for, right? And this is primarily driven by the fact that due to the fragmented systems, right, there's limited data availability, right? So you have to, as an organization, you have to figure out where do you get a data piece that describes one aspect of the 5 C's of credit, for example, and where you're going to get another data piece to be able to describe that, right? Another piece of credit or insurance provision, right? And that leads closely to the problem of data inconsistency, because again, there are different standards in which each of these pieces of data is collected with, right? The other thing is the fact that as a result of having these fragmented systems, then there's a hindrance in product development, right? Now, ideally, and this is, and for us, there are many aspects in which you can look at product development, right? But for us, we look at looking at it from a point of personalization, right? Now, when you look at why technology has really catalyzed a lot of industries the world over, is the fact that you are able to personalize a user experience, right? Or the service or the value that a customer is able to get, right? But now in the case of getting access to insurance and financial services in the global South Africa, for example, this personalization lacks, right? And when you try and study and just go down to the root problem, you find that because of these fragmented systems, it becomes very, very difficult to really build a solution that is tailor-made to each and every farmer in the ecosystem that you're working with, right? You're working in, right? And that is why you find the current status quo, for example, is a situation whereby products are developed. One product is developed to support 10,000 farmers, for example, with the assumption that those 10,000 farmers have the same behaviors and patterns and what have you, which simply does not work, right? Now, leading down further into the problems of data systems, fragmentation systems, is now the aspect of data transparency and trust, right? And the fact that and one of the key highlights that we see here is what we call the information asymmetry, right? What do we mean by this? Usually, and often not, you find that because of the fragmented systems, it always follows that a lot of these organizations have less data than the farmers have in terms of understanding the risk, right? So if we go to a farmer, for example, and tell them, oh, listen, we think we can give you insurance at this amount of money because of X, Y, and Z, the farmer gets back to you and asks you a question of, why is that the case? Because from my point of view, and based on these factors, I think my risk should be at a different level altogether, right? And these are some of the things that we think fragmented systems get to affect within the whole insurance ecosystem. And we believe that by building systems that enable sort of a cohesive pooling of data and understanding of their customer profiles is very, very important, right? Now, if you look at the history of financial systems, for example, in the case of Mohammed Yunus with Grameen Bank, the case of the InterSwitch, or the case of M-Pesas and what have you, one of the key things that they started by solving for was how do we get to bring all the data together so that we can use that data to make decisions. And it's one of the things that we as agros are really focusing on and trying to solve for and support at scale. So I'm going to stop at that point, and in case you need any more clarification, I'm happy to provide. Over to you, Tofi.
Yeah, thank you. I mean, this is also really quite fascinating on the agile side. Like essentially Africa being so diverse, even in a single country, you have so many microclimates. So if you tell farmers that you're gonna take a certain insurance, sometimes you are paying them based on something completely different from what they're experiencing, which means that well, you don't have the data and they don't have any idea why you are paying them or not paying them, which overall come down to trust. Like people feel like, oh, insurance is just basically not working for them, and oftentimes they wouldn't want to pay for it. So yeah, thanks for clarifying this. I'll just lead to the last part of the session, which is around data privacy, and then also overall, basically how to just overall safeguard consumers. The critical example I'm taking today, and I'll start with Mwenda, is about AI. Obviously, everyone has seen the huge, let's say, focus on the tech industry and AI these days, and that comes with also unexpected behaviors where you can almost today, even this video today, you can you can almost generate it by AI. Your KYC can be replicated like almost in an instance. So how do we deal with that? How do we safeguard consumers? How do we protect data? How do we protect privacy in this digital age?
Yeah, I mean, Tofi, this is a very important problem, right? In the face of deepfakes and what have you. Recently, I was just looking at a video of my president in Kenya dancing to some music, right? And of course, for sure, we know he's not able to do to make the moves that he was making in that video, right? And it looked so believable, you know. And were it not for the fact that we knew and it was labeled as a deepfake, most of us and actually people in the communities out there would actually believe that this is actually what is happening, that is able to do X, Y, and Z. So in the face of this advanced AI, we need to think about how to mitigate the challenges that comes with the likes of deepfakes, right? So one of the things that comes to my mind is investing a lot more on advanced fraud detection systems, right? And in this case, I look at it from two perspectives. One is network analysis, right? You know, the thing about human beings, and especially when you use technology, you leave your fingerprints all over the place, right? So if there was a way, and I think, and there are many companies that are trying to figure this thing out, and essentially figuring out ways in which you can differentiate the network analysis of real people from data or patterns of deepfakes and what have you, of fake AI, right? That would be one of the key areas I think would needs a lot of thought and focus on, right? Because it's very difficult for an AI to replicate. Presently, that is, it's very difficult for an AI to replicate your network footprints across the last 10, 20 years of you using technology, from Facebook to WhatsApp to your emails, etc, etc. So I think it's one of the key areas that innovation would really help. The second thing, of course, is closely related to that is anomaly detection systems, again, that look at the differences between normal behavior and what is considered to be suspicious behavior. So there's a need to invest in AI models and algorithms that are able to sort of learn in real time, okay, across diverse data sets. Again, it goes back to our initial point of figuring out a way of bringing all the data together, so then we can also build on top of that using advanced MLs across diverse data sets. I'm going to mention three other points, particularly around data privacy and security, and they include data minimization, right? Now, we live in a world where at the moment, a lot of data is exposed to the world, right? But maybe there's an hypothesis whereby we need to sort of minimize what data is exposed to the world, right? So there's a need for us as technologists and founders and companies to figure out ways in which we can build systems that avoid exposure of unnecessary data to the world, right? So by doing this, essentially, we are starving these deep fakes from having access to data that would sort of mimic our behaviors and patterns.
Expose.
Yes, and quickly to the other point is differential privacy, which is essentially where we sort of take it's a sort of techniques whereby you take someone's data, right, and then you add noise to it, right, thereby confusing these deep fakes, right, because you have some way of reverse engineering that and getting back to the real data, but these AIs are not able to figure out that part. And then finally, federated learning, which essentially is looking at building decentralized systems that look at using data and AI models that pull data from different and diverse diverse localities and data sets and databases. Yes.
Perfect, perfect. Yeah, we have a kind of limited time, but maybe I'll just take another slot, another few minutes with Jinal, especially around this particular topic of AI payments. I know that you are also a payment expert. I spend a lot of time with Ripple. Um, to be honest, for me, the most scary thing, and I'm also like a crypto native, the most scary thing is combining AI in blockchain. Like, crypto is something that you can't control. This is something that happens that we decided that no one controls. So imagine just that you have these AI agents that all of a sudden running on the blockchain that can come to, consensus. Like we are literally giving away our, our liberty and things like that. So yeah, I'd just be curious about what you think about that combination.
And there's that finality to crypto, right? Once it's gone,
Absolutely.
it's gone. There's nothing
Exactly.
you can do.
Exactly.
I think our approach to this, and this is it just in the context of Epoch and where we work, our approach to it is very low tech in the sense, because the way we think about it is there's an inherent governance tied to these supply chains and how business is done. So the farmers know the buyers know, or the processors know the buyers, and so on. And there's an inherent sort of level of trust and kind of daily connection between these entities. And we try to leverage as much of that as possible to drive payments and to drive the data. So if something doesn't look right, it probably has a much higher chance of detection because there's such a strong governance on the ground. Now you contrast this with, voluntary carbon markets where you're paying money to, reforest some land that you have absolutely no connection to in some part of the world. Now you have to send verifiers and you have to see if that, satellite data is being spoofed and whether you're actually getting, the reforestation effort. That, like, the governance linkage is just not there. And so now you have to solve around it to do that. But in the case of insetting, in the case of, these supply chains with existing sort of business relationships, you're building on that to, prevent that from happening in the first place. That's also what I like about the model that Vercor is using, which is, you're sort of leveraging like a core business activity, and you're sort of adding pieces of data around it so that when something gets, something fake or, improbable gets introduced, it has a much higher chance of detection because people know each other. They know who the other side of the transaction is. They know what is reasonable, what's not reasonable, what's happening, and there's a constant level of human interaction and human touch to make that happen. All that to say, it's a very compared to Muenda, a very sort of low tech solution, which is really good old fashioned human interaction and and business relationships.
Absolutely. I mean, it's probably both. Sometimes you have to do like low tech and just bank on the social relationship that we have on a day-to-day basis. And other cases, you have to. Sometimes you just need to also do a little bit deeper tech in a sense that you need to scale something that has to touch, I don't know, a million farmers. Sometimes it just doesn't work at a social local level. Yeah, maybe we'll conclude with Isabel on the same primary topic. One of the things, for example, also I'm a little bit concerned is most of these AI models that we use today, and that you're going to see them almost in the quite surely in the next coming few months or few years as the main engine that are going to power, for example, things like credit rating. All of these models are being trained with data that often is biased because of where we're taking it. Like how many people have access in, I don't know, in Mexico, in the rural areas, or here in Africa, how many of them have access to Reddit? How many of them have access to Twitter and or Facebook at a certain point? And we know that most of these AI models are being kind of trained from that kind of from those kind of data sets. So it means that inherently we are having some kind of predefined bias when you talk about credit rating. So I'm just curious about what do you think about that in a few words before we conclude the session?
Yeah, sure. So that's exactly where the challenge lays. And what Junal was just mentioning is learning how to combine and how to level both things. So on one side, take advantage of this amazing technology that AI is and leverage it for better risk analysis, but taking into consideration that these big data sets may be biased. And that's something that's happening. We've seen it happen with big companies like Apple. Like, it's real. So it's a really I think tricky balance startups and all companies have to really manage in order to take advantage of the technology, use it to improve the business, to improve the processes, to make our works and our work and our lives easier. But also bear in mind that this data is not perfect and that there's still this transition period where I think it's going to be a little bit more, not necessarily manual, but not as automatic as AI necessarily is. This transition period where we still maybe need to double check whether what AI is bringing to us in terms of risk analysis takes into account the whole picture and the important things of each company's mission. For example, Vercor is social enterprise in its core. Like, ESG is embedded in our mission. Everything we do works around the farmer and to give the farmer more access to financing and to a better livelihood. So being able to make a balance between these two things, I think, is going to be a transition period. And then hopefully, as more unbiased data is collected and as companies like the ones in this panel do amazing work, we're going to be able to leverage AI without that much caution.
Thank you, Isabel. Again, thank you everyone for your time. I know that everyone has a very busy schedule, and I know that we did set up this in the almost at the last minute. So thank you very much for your time and for your contribution. This session is going to be published, I think, about the 16th of October. So yeah, we'll publish it with the Financial Inclusion Week, and we'll see you there probably over the social network in the comments. Thank you very much, and have a safe end of day, everyone. Thank you.
Thank you.
Sophie.
Thank you so much.
Meeting you.
Thank you.
Bye.